Japanese policymakers say they are keeping rates steady while they monitor risks to the economy. Yuko Fukushima joins us from our business desk to give us the context around the decision.
All right, thanks, Rina. Well, the two-day meeting that wrapped up on Thursday was the Bank of Japan's first since Takaichi Sanae became prime minister. The timing lent the result some extra significance. That said, the decision to leave the rate on hold was widely expected. Board members say now is not the time for a change. They're still watching risks to the economy. The main concern is uncertainty abroad, specifically worsening U.S. job data and fears of tariff-driven inflation. So for now, the BOJ will keep targeting a short-term rate of around 0.5%. The result makes it 6 meetings in a row where the central bank has held the line. The last time it raised the rate was back in January. The latest decision wasn't unanimous, though. 2 out of the 9 board members argued in favor of a hike, just as they did at the last meeting in September. Observers are watching for any signs that others on the board might shift camp. There were some other important figures to come out of the meeting, including the BOJ's updated economic projections. The bank's median forecast for growth for fiscal 2025 is now at an annualized 0.7% in real terms. That's a slight improvement from the July forecast of 0.6%. The bank still expects that prices for consumer goods, barring fresh food, will rise by 2.7% in fiscal 2025. It says the figure will likely drop to 1.8% next year, before hitting 2% in 2027. Coincidentally, 2% is the BOJ's Goldilocks figure. The number it cites as its inflationary target. Not too high, not too low, just right. As is customary, Governor Ueda Kazuo held a news conference after the meeting to explain the decision. He said the bank wants more hard data to back up its predictions before it goes ahead with a hike.
If the economy and prices move as we predict, the BOJ will continue to raise the policy rate in line with how much conditions improve. That's one way to adjust the degree of monetary easing policy.
I spoke with Adachi Masamichi, economist who used to work at the Bank of Japan. This is what he had to say about the decision.
Governor Ueda's cautious stance was very clear in the press conference that the Bank of Japan is acknowledged that their policy stance is to continue the policy normalization, meaning that they want to raise the rate. They acknowledge the downside risk from overseas development, and especially on the effect of the U.S. tariff policies, and that's linked to the next year's wage negotiations between Japanese corporate and the Japanese labor unions. So markets are now anticipating that the BOJ may raise rate in December or January, but Governor Ueda did not give us any clear hint on the timing of the next rate hike.
I was hearing from the press conference that the initial momentum of the spring wage negotiations will be important. What does that mean? When is that?
The Federation of the Labor Unions will officially release the outcome of the negotiations in mid of the March. And that means if the BOJ wants to confirm the hard data, they have to wait until March. But as you mentioned, Governor Ueda wants to see the initial momentum of this wage negotiation, meaning that corporate size stance on wage setting or wage negotiation is what he wants to confirm. So either end of this year or beginning of next year, that timing will come.
So Adachi is one of many economists tipping a rate rise in December or January. He's quick to note the rate is still very low, so the central bank has plenty of room to move without threatening its easy money position. Looking at the environment of Japan and the rest of the world, which do you think will it be? Is it December or January?
Please remember that the current 0.5% nominal policy rate is very, very accommodative. Inflation is close to 3%, and the inflation expectation probably close to 2% already. So that means 0.5% of the nominal policy rate is minus 1.5 or even larger real interest rate. Therefore, as long as the situation be benign towards the end of the year, I think BOJ can raise the rate in December or at least January next year.
So, plenty for policymakers to ponder in the months ahead.